Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys, and probably on the next week we will shift to New Zealand dollar because as you can see, recent data as the Fed meeting and some dovish comments from the Fed as it was treated by the investors as poor United States gross domestic product numbers on Friday has destroyed the short-term bearish setup on the dollar-related currencies. I mean euro currency mostly. So it doesn't mean that our long-term analysis, weekly research on the euro currency that we have prepared last week has been destroyed. It's everything. Overall situation stands the same, but the patterns that we were traded in last week currently mostly have been cancelled by the recent upward action due to the statistics from the United States. That's why to return back to discussion on the euro currency, we probably will need some time to see how situation will turn, what will really happen in the short-term charts. Especially it's interesting what will be on the new non-farm payrolls release by the end of the next week, and what patterns will be formed. Because this process that's right now going on the euro currency, on the Great British Pound, they are not really short-term. That's why it's really could be significant long-term volatility stands, and when the setups will appear and then will be cancelled and something will happen. But overall situation on the euro currency still stands, as we have said in our weekly research in last week's, mostly moderately bearish. So we just need to wait a bit. But at the same time, guys, on the other currencies we have not bad setups, especially on the New Zealand dollar. And that's why, just to not lose time, we will turn to the New Zealand dollar trading on the coming week. And currently we will discuss our trading plan and our setup that we have. So on the weekly research that we have prepared, there are good explanation of the background of this possible trade. But in the daily video, we will turn particular to discussion on how we will take this possible position on the New Zealand dollar and what we will be watching for, especially on the Monday. So guys, we have the bullish pattern on the weekly chart, as well as some other moments in the price behavior of the New Zealand dollar that points on the possible upward reaction. Currently, guys, it's very difficult to make the judgment on the long-term picture on the New Zealand dollar. From the one point of view, mostly action was bearish previously. Fundamentally, we do not see any really some signs that could support either bullish or bearish signs. So mostly market stands very balanced. But in the recent times, especially in the recent few weeks, market shows an action that's not really typical for the bearish market. And that's why we could be in a situation where something's starting to change on the Kiwi. But this just haven't taken the shape yet. All these changes that's now is going, they're not currently is shifted to some real clear patterns. That's why our trading plan on the coming week is mostly the tactical, since we just have the pattern on the weekly chart and we have intention to work with it. So what we will get as a result, we will see. The major risk factor right now is non-farm payrolls release, because we have the pattern on the weekly chart, and this will be could be really hurted by the non-farm payrolls data. So, but technically, it's bullish, and we will discuss how we could trade with it. So, on the daily chart, as you can see, market has turned up on the same data that have come from the United States, Fed meeting and the poor gross domestic product. So it's upward action. Take a look that this reversal has started right at some confluence support, and in general this area around the trend line is some cluster of the fib levels. So the major three fib level, some confluence from the minor levels here stand. So you can see market has touched it, this confluence just barely touched its upper body and turns to the upside. Upward action was really fast. Also, guys, take a look that we have the bullish divergence with the MACD right at the confluence support, and take a look at the cross angle of the line crossing on the MACD. It's very bullish. The stronger angle is then the most reliable signal based on the MACD. As a result, as you can see, market has reached the daily overbought. So it means that currently it's not the time to take the position immediately. So we need to see when market will retrace lower and will abandon this uncomfortable overbought situation. So as you can see how it was previously. Here the market has made overbought retracement. Here again retracement, again retracement. So overbought is it doesn't show the direction, it doesn't show the trend, and doesn't cancel the trend that exists. It just shows this market right now is a bit overextended in one direction. That's why we need to wait a bit when the market reestablish some equilibrium and will abandon this uncomfortable territory of the overboughting. So on the 4-hour time frame chart, we see some other important signs. Take a look how this upward reversal has happened. On this bottom, we see long tails on almost each candle here. It suggests that here stands some buy orders and that support markets. Those real purchases have happened here that push market higher, and market has skyrocketed to the upside. Also, take a look here. We see some minor wash and rinse of these lows. So some stops probably have been placed here below this area, and market take a look, has pierced it twice, here and here. Some minor wash and rinse. After that, some market has returned and started to move up. So as we are expecting some retracement, we probably should watch for this area. This is approximately 71.25 confluence. And take a look here. We will get the new pivot point for August. So it'll be here and new weekly pivot point. So that scenario that right now at least seems very suitable for searching buy signals around it, since this will let market to abandon the situation of the overbought. At the same time, market simultaneously will test both pivots, as monthly and weekly. And also we have the confluence support. That's very reliable area, and that will be our primary area where we'll be watching for possible buy signals on the New Zealand dollar on the next week. On the hourly chart, guys, we have also some interesting moments. But this is mostly for the scalp traders if you trade on the hourly chart and lower time frames. First of all, guys, take a look that simultaneously with the overbought, market has completed this A, B, C bottom 1618 target. So by Judd-Napoli framework, we have the directional pattern that calls us the Kibi trade. This is some kind of the stretch pattern, but the stretch is a combination of the overbought or oversold with the fib level. And Kibi is a combination of the overbought and oversold with the fib extension. So they are a bit different, but they work similar. So according to the Judd-Napoli framework, when you get the Kibi, you should wait when the trend will shift bearish. So we will plot the trend indicator, this will be MACD. Currently it's still bullish. So we need to wait when the market will shift trend bearish. Then, according to the Judd-Napoli, market should show some retracement to the major fib level. So this will be 3.8 or 6.18, where trader should take the position down. And the target will be is the extension of this A, B, C, D pattern. So this is, as you can see, where the scalp trade. It's mostly for those of you who trade on the 5-minute chart, 50-minute chart, or something of that sort. That's the Kibi trade. But in addition to the Kibi trade, we could get here, as you can see, minor double repo or bread and butter, because take a look, this recent thrust up is really nice. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to the upside, suitable for the scalp, bread and butter, or double repo trade. So currently it's more logical to suggest the double repo, because market at overbought and we expect deeper retracement. As bread and butter is mostly the continuation pattern, double repo is mostly reversal. That's why the double repo will be more logical to see here. So as you can see, New Zealand dollar right now is the gold mine of the different patterns for any taste of every trader. So if you trade on intraday charts, you could trade this Kiwi or, for example, double repo pattern that could be formed here. If you trade on daily, on a weekly chart, you could watch for a pattern that we have gone on the weekly chart and think about taking the position based on this pattern. For that purpose, we need to wait some retracement when market will abandon the overbought condition. So we think that New Zealand dollar is very interesting and most clear currency right now among all other major currencies. Because on euro currency, as I said, it's nothing exists right now. On Great British Pound, situation is still the same. It even has shown no reaction on the gross domestic product values. So that's why the New Zealand dollar right now shows very clear setup and clear patterns. That's why we think that maybe it makes sense to spend some time on it.